let's take a look at these setups. I sent these charts out to you yesterday, or sent them to Gerald to send out to you. Okay. We've been going over the breakout strategy, and what that is when we break through an ATR level where we have a possible speed in the market that's going to take out some buy stops or take out sell stops and accelerate price to the upside or downside. So if you're looking in the room, we know that we have our zones, our trend zones. They're green or red, very simple. If they're green, we're looking to buy. If they're red, we're looking to sell. We have our momentum, our stronger, weaker oscillator down below to confirm if the market is weak or strong when we're breaking out of these levels. So here's a breakout level this morning. Here's a breakout level this morning. And you can see when they broke out after 1, 2 candle, the third candle will turn yellow. And then you'll see that that is the trigger for the breakout. Consequently, you'll notice my stronger, weaker oscillator. You can use that with the arrows that fire here and also the breakout levels. If you are in a stronger position, that's the best position for a breakout, meaning you're above 100. That means you're stronger position, strong market. So we were in a strong market this morning. On the breakout, we had 2 breakouts this morning so far. This morning on the S&P, we had one at 3:18 this morning a.m. I love that London push, especially when you guys get the strategy for NASDAQ futures. If you trade the NASDAQ futures, you tend to see a violent move when the London open at 3 a.m. If some of you guys trade that time period, 3 a.m. to 4 a.m., you see a little violent surge, usually 3 to 3:30 on the NASDAQ futures. So, and there's our next pull-in. Trigger was at what, 554. It gave a yellow, a breakout level. You see it broke 1 candle, 2 candle, 3. So I showed these on the S&P in the room yesterday. Had some nice breakouts. So let's go over to yesterday's trades also. So let's go over our regular setups. So we have our regular setups in the room. Now we're packaging this together where you're going to get this workspace set up where you'll have the oscillator below. These arrows will automatically fire, and these arrows will fire on these setups. They'll fire on the first wave, the slingshot, the Momo failure, and the trap. This oscillator is really nice to confirm these arrows because the arrows, when they fire, you don't want to get caught into a weaker market if you're buying or a stronger market if you're selling. So you could tell the strong market confirmation with the arrow firing was getting above 100 here. A couple bars later at 47.60.50, and the market just explodes to the upside. It goes up 14.5 S&P points from that slingshot. So you can use that confirmation oscillator below to see if you're in a weaker or stronger market when these arrows fire. They work really well together. Also, you see when this yellow, this fired live yesterday in the room for you, here was our breakout level. So when this yellow trigger fired here also yesterday at 3:42, it showed that's a trigger for a breakout, possible breakout in the S&P, and then we fired from 47.66, almost a 10-point run into the close. The one before that, we had a short. Now the shorts will be opposite. Short, we had a slingshot arrow that fired automatically there in the room when that bar formed. That arrow fired. If you notice, we have a weak market confirmation below when we're getting below a 0 or negative 100 per se. So when it broke through here, that confirmed our weak market. And right when she broke 100, the low of this bar, 62.25, you had a potential all the way down to 46. So you had another 15, 16 point S&P potential run. Right after that, we had our breakdown. This happened live in the room yesterday. This was my yellow candle or yellow bar highlight formed right below the breakout level. And this was a nice one, 2 candle below, 40 or 58.50 down to 46. So we had a 12 S&P point run there, also potential. So you can see what's happening is, let's take a look at both of these so you see some synergy between the two. What you're going to notice with these setups, and that's why we're going to package this setup together, where you get the slingshots and all these arrows firing with our momentum indicator below, also with the zone breakout on the same chart, because they really have good synergy together. When the arrow fires here at this level, your breakout level comes next. So when you get a slingshot full retracement, it gets into a weak market, and then we have the breakout level that fires. If you noticed on that was a sell, if you notice on the buy, it's just the opposite. We had a slingshot that fired, deep retracement, then the breakout, then a continuation, and there's your stronger market. So you can see when these fire off, you'll get, some will be more robust moves than others. This one started out the day at 930, 64.5, potential down to what, 58, 57.75, 58. So still a 6-7 point potential, and this one fired 60, potential down to what, 58. So that's a 2 point potential on this one. What you're going to recognize is this, is you're going to recognize when, I love watching these yellow highlighted bar breakouts happen when you're cutting through market profile. And it's happened all week this week. You saw it last week on these breakout levels. When you get through this high value or low value area, this has worked since 1985. These are all the participants in the market, all of them. All the hedge funds, all the prop firms, all the high frequency traders, professional, amateur traders, everybody. If you notice that your breakout level is here, over top of HVA or over top of LVA, I went over this in the room last week when there's a couple trades that's happening live. If you notice that you are on top of HVA, LVA, and you're sitting with a breakout level that hasn't broke out yet, you're sitting at here, right? You're sitting at this level, or you're sitting at another level. Yesterday, it was sitting right at LVA. I mean, it was resting right on it. When that breaks out, you got a high probability extension that's coming. And you typically see a violent move to the upside. Because what happens is you get these, all these sell orders are up here, or all these shorts are up at high value area. Because what's market profile supposed to do? Market profile is supposed to be an orderly market. It contains an orderly market. The market can't go vertical every day. It can't go sideways every day. The job of market profile is to create an orderly market. So what it shows is that orderly market. It shows that once we get, if we're inside of it, the market is called balanced. So we're in a balanced market. So that's a balanced market. You have resting sells up here, resting buys down here. It should bounce in between profile. That's a normal balanced market. What happens though is the market becomes imbalanced, and when you get an imbalance, this is why I put the breakout trade in the room. What I recognized was that once you violate some ATR levels in an imbalanced market, the market does what? It likes to go vertical, because now we become into a imbalanced market. So you come from a balanced market where the market is in between high value, which is called HVA, the red line that automatically is the distribution here. And here's the accumulation, the LVA, low value area. So this is normal distribution accumulation, right, in between profile. So this is called a balanced market. When you get outside of a balanced market, and this has worked, like I said, since 1985, and volume profile since 1994, once you get outside of value, what happens is you get all these resting orders here that have to cover their positions. So if you're shorting here, these buy stops is like a self-generating trade. You'll see these markets move up to this price profile, typically of 95.5. So you can see this violent break to the upside. The same thing with the downside. And when you break through low value, here's where our resting breakdown level was. Now let's just take a look at this. Look at the synergy you have between profile and my breakout breakdown levels. So right there was your market profile, right? At right before 2 o'clock. If you look at 2 o'clock, it's resting right on it. Right into 2 o'clock, the market profile, and you see, right before 2 o'clock, you see the move. This is right on LVA. If you're in the room yesterday when I was in the room, when I was talking, you can see I'm not talking, but in the room chatting, this is right on low value area, and it broke and got a lot of sell stops that we're hitting. So it's like it's a self-generating trade. You're here when you get above market profile. Look at the energy you get in the market when you get through my breakout levels. Lots of energy in the market. So this is how we're going to package it together on your own workspaces. These yellow highlighted, we're going to show you, these will be set up for you, these highlighted breakout levels. There's a couple things I added to this, okay? And I'll show you the strategy that goes with this. One thing I added is I've given you an option of how many closes you want above the breakout. Obviously, we're in a breakout run right now in the S&P. The breakout run happened at 47.78. It is running. Why? It's just there's no resistance until we get to price profile up here. It even cut through it at, what, 95.5. Why? Because these are all buy stops that are hitting from the resting sell orders in a normal accumulation distribution market. Once you get outside of the HVA, you see that whole body candle close. But I like 2 candles once it close out. You can see that you get a nice surge in the market. So that's what we're getting right now. We're getting a breakout surge. What I added for you guys in the strategy, which I'll show you in a second, is I added the number of closes above the breakout. There's 2 things I added to the strategy. One, the one thing with the breakout levels in the room is that I put it as on the 3rd candle because I don't want to get caught with an M top or W bottom. In other words, you want to get through this high. If it comes through, you want to break through this high, right? You want to cut through that high right there. So what I did on the strategy is right when these ATR starts forming, it's going to bump that breakup level to that swing high. That's one that I've done. The second thing I've done, I added to the strategy, is that I added the number of closes you can have. Some of you will want to get early on the breakout. You'll want to get a 1 candle breakout. Some of you 2 candles, some a 3 candle, some a 4 candle later to get strong momentum. Because usually if it hits 4 candles later or 3, that's typically when these sell stops or buy stops are cranking. And, you know, we want to get those first, second targets off. So you have a choice of putting a 1, 2, 3 candle, totally up to you on whatever market you trade. If you want to just, I have it in the room for getting this yellow forms on a 3 close above the breakout level. You guys can do what you want on your own strategy. But that is an option you guys can have. You can see it goes 1, 2, 3rd turns yellow. Yesterday, 1, 2, 3rd turns yellow. But if you wanted it to be 1, it's going to save you about 3 ticks, sometimes 4 ticks a point. But what you're risking is you may have an M top or W bottom on that swing low. So if you just want to clear that swing low, you can just adjust your entry accordingly. All right. So you won't have to be involved with M tops and W bottoms, because what happens with M tops and W bottoms is that they'll just take out the low on a W and then they shoot up, all right, or what have you. So you can adjust what you want to do. If you want to jump in early and say, okay, I'll take that chance of M and W coming by getting me in a point earlier to get my first targets off, you can do that also. So that's totally your option of doing that. All right, so that's something that that you'll do. Now the next breakout level will be here. So let's take a look at this live right now. Oops. It's a neat little breakout level. Why? Because it's right on price profile. Price profile is sitting right up here also right now, right? Right there's price profile. Sitting right at what, 95.5. So we know if we clear this breakout level, so if it closes 2 candles above this breakout level that just formed, see these horizontal equal dots? If it closes above there, it's going to turn yellow by 2 candle closes. So that is another setup that's possibly coming for a range breakout. You may see one that fires right there and fires in the trade. Let's take a look at the strategy that you guys are getting with the overall the strategy that goes with the room chart. So the room charts are going to be packaged like together. I just showed you. So the strategy, you can see that now you can have different targets on it. I have 6 targets in there. You can make 1 target if you want, 1 contract, 2 contract, 3 whatever contracts you guys want. This is a 1/20/20 on the S&P. This is the breakout level this morning. We had 2 breakout levels this morning, right? It's not going to get you in 2 back-to-back trades if you're already long. Here's our first breakout level that turned yellow. This is our next one, but it's already long, so it's not going to get you long twice. So those are 2 breakout levels here this morning. So the strategy is essentially going to do the same thing as the indicator in the room, but you can have that automated on taking breakouts. So yesterday, that was at the close. You can see that was my yellow candle. The strategy will turn yellow right there for you. The breakdown yesterday was right here. 2 candle closed below, turned yellow. And then we had the breakdown yesterday also, starting the day off. There's your 2 candle, and there's your targets there also. So you can see you can dictate how many closes you want below this breakdown level, but the strategy is doing exactly what the room charts are doing, only it's automated for you. Okay, so this is one part of the strategy that you can do. That's called the zone breakout strategy. So what it'll do is let's put it next to it. So if I put this up next to what the room charts are showing, it's showing 97 as my breakout level. That will turn a yellow candle, right? Well, over here, my strategy is showing 97 also. So you can see they are right in line with each other on projecting the breakouts, the strategy, and also the room charts. Okay. What I've done is I just have the strategy running in the background with price targets hidden. So you see a yellow bar. In other words, if you look right here in this breakout, you see this yellow bar that formed this morning right there at 318. It's the same thing. This is a 1/20/20 chart here also. What I've done is at 318, right there's your yellow candle that formed. I just hid the price fills. Do not plot. You go down, do not plot executions, and that will be in the background running for you to show you where these triggers are on the strategy. Okay? So that's what you're going to be doing also. Now, you can also trade these. We do have a strategy against these arrows. You can trade these arrows. If you just wanted the slingshot as a strategy, so this is another strategy you guys are going to be getting. So we have the breakout strategy, and then we have the wave strategies, slingshot, failure, trap, Momo. So let's say you just want to take the trap trade. Trap trade would be here. It would enter short there. A trap trade is a slingshot into a failure. When you see, because guess what happens here? Look what happens. You get an arrow that fires a slingshot, but does it get above 100 for a strong market? No. So guess what they're doing? They're trapping traders. They're trapping the novice traders to thinking that the market is going to accelerate. But our strength oscillator down here tells us it is not strengthening, or it would be going above 100, right? Because on strong markets, we know it will go above, where's it at? Right here, with strong markets, it will get above 100, and I'll start cranking to the upside, right? So with trap trades, there's your slingshot, but it does not get above 100. So right when that arrow comes in, if you see back-to-back arrows come out like this, it's a really high probability trade because you're trapping all these longs and accelerates to the downside. This started the move down, by the way. This trap trade started that slingshot, started the breakdown. This is the first phase of a trend change. If I see a trap trade, immediately I think slingshot first, breakdown second. Immediately. That's my immediate combo I'm looking for. I'm looking for a trap, looking for a slingshot, I'm looking for a breakdown. Right? But look at the oscillator, it does not get above 100. But there, when the arrow fires, indicating a trap, that traders have got trapped, look at the oscillator get below the 0 or negative 100 there. That told me right there, at that arrow, this market is set up for a major move to the downside. And that's what we had. It goes into it, you get a trend change, you get a slingshot, arrow fires, and we go right into a zone short on a breakdown. So that's the rhythm of the market. I mean, that's pretty much the rhythm of it. Here the same way, you get a trend change, slingshot, there's your breakout. All right, so now this morning what we'll do, we've had two breakouts here already this morning. You can see it on the strategy the same way. There's your breakout level. Here's my next breakout level, 47.97. So this is the next breakout level we're going to look for the S&P to fire in for the next breakout level. We may have a slingshot coming up that gives us confirmation of a stronger market above 100.